Hi everyone, it's a daily 10-minute business and finance news wrap for this Monday, the 14th of February 2022. Later, we'll take a closer look at the direction of new and used car prices. We'll speak with the CEO of carsales.com. But first to Crown Resorts, and its board has recommended an $8.9 billion takeover by private equity firm Blackstone. Now, it's Blackstone's fourth attempt. So what now for the business and the casino operator, the sector, and what about its major shareholder, James Packer? For more, I spoke earlier with James Kirby. He's the wealth editor at The Australian. James, firstly at $13.10 per share, is this a good deal for shareholders?
Yes, it's certainly a good deal for shareholders. You've got to remember this company's been through the wars. It's been more or less the same price for a number of years. And the fair value estimated in the market is just a tad higher than this, but this is a cash offer, so pretty good.
So given the regulatory issues, the public scrutiny over the past few years especially, what's the appeal of these assets for Blackstone?
Oh, the appeal of the assets for someone like Blackstone is, first of all, they're not the Packers, right? So they're clean in that respect as an international institutional group. They've got experience in running casinos in the US, and really, in many ways, the only way for a casino tourism group from here is up.
As you mentioned, James Packer. Now, he's the biggest shareholder of the company. He's unlikely to block this deal, right?
Oh, he's quite unlikely to block it. I think the signals are now that he's ready to go. I mean, you must remember this deal, this offer, apart from being all cash, it's been lifted 4 times. And it's now pretty much close to what anyone would think is fair value for a company that still has regulatory hurdles ahead of it, not to mention the actual specific hurdles around a takeover. So it seems likely that he will actually first accept and probably relinquish the bulk of his stake as well.
Okay, can we talk about James Packer in a bit more detail? Because this will end his long relationship with Crown. He's also out of Channel 9 some time ago, so he's winding down his relationship with publicly listed companies. What now for James Packer, do you think?
You must remember, Packer, one of the things was he basically bet everything on gambling and the casino empire. Then it was a global gamble. Then it reduced to a domestic only empire, if you like, in gambling. And then that, in many ways, it absolutely certainly deteriorated under his watch and his ownership. So, but he has, first of all, anyone in our economy with $3 billion ready to spend is going to have a lot of new friends. But someone like Packer is already active. Apparently, he is already in an investment company that involves UniSuper and may also involve Kerry Stokes. And you'll find that he will be back in action very soon with that amount of cash. It has to be invested. It will be invested, no doubt, in the areas he knows best, property and possibly casinos again, entirely likely.
What do you think will be his lasting legacy?
Oh, look, in some ways it's a sad story, what has happened with James Packer, and think of the possibilities and opportunities that he was presented with at the start. I think, ironically, I think his legacy will be that he was probably the first major figure in Australian business to mention mental health as an issue and put it on the table. And that really had never been done by a central figure before. And even in the short period of time since he did that, it's now very much acceptable and commonplace and probably a welcome development in that respect.
James Kirby there, wealth editor at The Australian. Now, the Australian share market today did close stronger. The S&P ASX 200 up by 0.4%, 7,243. That's despite growing geopolitical concerns. Crown shares closed below that $13.10 offer price from Blackstone at $12.60. For more, I spoke earlier with Adam Dawes. He is a senior investment advisor at Shaw & Partners. Adam, first of all, the Crown takeover, what does it mean for the sector and for the future of James Packer?
Well, certainly for the sector, it's actually really, really good. Certainly Crown Resorts has agreed from their takeover proposal from the US investment firm Blackstone, which values the company around about $8.9 billion. And I think that's certainly one of those things. And certainly Star should do well on the back of that. We do know Packer is a large shareholder of Crown, and I think he's been a natural seller of this stock for a long time now. So I think this is one way for him to get out of it. And at $13.10, Blackstone has come back. I think it's been about a year now that Blackstone's been at Crown to take it over. And so they've put multiple bids in there. But at $13.10, I think it offers some really good investment, as well as it's all cash. So I think that really provides some shareholders with some really good value going forward.
International themes are playing out on the share market today. Safe havens doing well, the likes of oil, potentially gold as well, and that's on the back of concerns of Ukraine. Is that right?
Yeah, absolutely. Investors are rushing to the gold mining stocks amid concerns that Russia could invade Ukraine. And look, certainly gold has been one of those ones that's lackluster. And I certainly know that in 2020, it hit a high of $2,000 an ounce. But at the moment, it's sitting around about $1,859 an ounce. So look, it's still got a little ways to go. But a lot of that defensive buying is certainly coming in there. And Australian gold stocks out of the ASX 200, 9 out of the 10 stocks are all gold stocks in that top sector. So that's really showing you that defensive buying is definitely coming into our market today.
So apart from that, what else is driving the market?
Yeah, well, it's been really interesting to see that the banks have been doing very, very well, and we've seen Westpac up 10% today. Sorry, not today, for the week. It's up 10%, and that's really on the back of most of the banking sector about higher interest rates. They're going to do quite well. They get increased revenue, and their NIM, their net interest margin, starts to expand. So that's really, really good for the banks. We're certainly seeing the oil stocks moving as well. Obviously, with the Ukraine tensions, oil is certainly looking to go higher. It's currently around $92. A barrel. But look, certainly, I think if Russia do invade, we could see oil over $100 a barrel. So that's certainly affecting the stocks today. And then really, the gold stocks have been pretty good as well. So that's what's really driving the market today.
We get jobs numbers out later this week. The jobs market will influence when local interest rates will rise, but there's no doubt we're already in a rising interest rate environment globally. How is this going to be impacting the way you invest?
Look, it certainly does impact the way, because we need to be a little bit more cautious about how we're investing clients' money. First of all, that we know that the US is looking to raise interest rates, and it's talked about being another 7 times. So in the next 7 meetings that they're going to have, they're going to raise interest rates. Here in Australia, it certainly looks like they're going to raise it by 50 basis points in August. But really, by investing and how you're going to invest in that, you look for interest rate sensitive stocks that will move with higher interest rates. And we've seen Computershare doing that. There's certainly that will benefit from higher interest rates. So you just got to be a little bit choosy of how you pick the stocks in the market going forward.
And finally, profit reporting season continues. Which one's caught your attention today?
Yeah, well, certainly the good one was JB Hi-Fi today. The stock actually rallied quite considerably, which has been fantastic. The other side of it is that JB Hi-Fi came out and said that they'll do a $250 million buyback, which really, I think, shows that there's confidence in the stock, and the market's certainly getting behind that. Albeit some of the sales numbers were a little bit lighter, I think the market really got behind that buyback. So that's been a good result, JB Hi-Fi. And probably one that's on the negative side is car sales. Albeit the revenue was a little bit softer in the Australian side of things. They also then said their South Korean division wasn't going to do so well, and also that their US division wasn't going to do so well. And they decided to not give us any guidance as well. Now, the market didn't take that too well, and that's something to definitely be watching going forward for car sales.
Okay, that's Adam Dawes there from Shaw and Partners. From the share market, let's go to the new and used car market. Adam did mention there carsales.com, half-year profit up 22.3% to $74.9 million. But I spoke with its CEO earlier today, who was telling me about why and how car prices will continue to remain high. Here is its CEO, Cameron McIntyre. Cameron, you've seen a 22% rise in half-year profit. To what extent has the pandemic been good for business?
Yeah, I mean, the pandemic has been good from the point of view that consumer behaviours changed. So consumer behaviours moved from looking to buy and purchase cars in the traditional way of attending a dealership to being more of a digital experience. So we're a digital business. As business moves online, which I think it's going to continue to do over time, that's good for us. We've seen demand for cars grow considerably with the pandemic as a result of people avoiding public transport, You've got state borders being shut down, so people can't travel as much, international borders, etc. So it's pushed people back into car ownership. But as a business, we're not just cars, we're caravans and boats and all that other leisure equipment has all seen a big spike in demand as consumer behaviour changes. So they've all been pretty big changes in the way people have behaved.
We've seen and heard a lot over the past few years about supply chain issues, COVID cases hitting manufacturing around the world, and the shortage of semiconductors and how that has hit the industry, right? So as economies reopen and demand continues to grow, those issues, from your experience and what you're seeing, have they eased at all?
Yeah, I think we have seen a little bit of an ease, and it depends. It's manufacturer to manufacturer, model to model. It's quite asymmetrical. But I'd say to you, across the board, we've seen some slight improvement, but I think it's going to take some time to keep unwinding, because it's not just inside the factory where the challenges are, it's outside the factory too when it comes to shipping and taking delivery of product. So our view is it's something that's going to continue to evolve. I suspect it's not going to be back to where it was until some stage towards the back end of this calendar year, maybe even in 2023. But that's one of the reasons why pricing remains so high.
Yeah, can you go into more detail about where prices are going, particularly for both new and used cars? And do you think it is across the board where these prices will remain elevated, and whether it's for those affordable brands or cars or for those luxury vehicles?
Yes, I mean we've seen used car pricing has gone up considerably over the last 2 years post pandemic. In some cases, we've seen price rises of anywhere between 30 and 40%, which is significant. And that's, as we've talked about, it's because of strong demand, and it's also because of supply constraints. In terms of new vehicle prices, new vehicle prices are even starting to go up in some cases too. So I don't see any considerable change to pricing in the short term. You've got consumers with significant savings that they've pocketed over the course of the last 2 years, and that combined with moving back into car ownership and so on, it's going to take some time for price to unwind. So today is probably as good a time as any for consumers to purchase a car, while these factors keep playing out over time.
Finally, a lot of talk about the move to electric vehicles. What kind of interest are you seeing on your websites for that, and how do you see the progression into EVs across the country?
Yeah, there's a lot of interest for EV. We survey consumers regularly, and our most recent survey found that 50% of consumers that we surveyed think that they'll be driving an EV inside the next 8 years. So the market for EV is going to continue to evolve. The constraints are, as we've talked about, around supply at the moment for EVs. The other concerns that consumers tend to have about the adoption of an EV is price. So how are EVs priced relative to your traditional combustion engine cars? How do I recharge my car? Are there enough charging stations around my neighbourhood and region where I can simply and easily recharge my car? That's another thing that goes through consumers' minds. And then the third element is around battery life, and how is the battery life of my EV going to endure over time? So, I mean, these are all questions that people are becoming more and more comfortable with. And so I think we'll continue to see the adoption of EVs change. But the first thing that has to change is, we need to see more supply, which will happen over time.
Cameron McIntyre there, the CEO of carsales.com. This SBS On the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.